Hey guys, Jim Vinosky with Manufacturing Talks. We've covered in the past the craziness around radical environmentalists going after how we generate electricity and use fossil fuels. Well, it turns out that they're using global finance rules to go after those same companies as well. And it's covered in a book called The Race to Zero by Paul Tice, How ESG Investing Will Crater the Global Financial System. Sober reading for sure, but Paul is here to tell us how um, radical environmentalists are using the ESG movement to change the rules of global finance. And number one, eventually defund fossil fuels entirely. And then number two, swing your savings and the whole global financial system to support their environmental and political whims. Paul's here to tell us all about it here on Manufacturing Talks. Stay tuned.
Welcome to Manufacturing Talks with Jim Vinosky. Industry has a million cool stories, and Jim talks to the movers and shakers who are making them happen. Let's dive in.
Hey, everybody. Welcome back to Manufacturing Talks. I'm Jim Vinosky, your host. Really great show today. I am joined by Paul Tice. He is the author of this book, The Race to Zero, How ESG Investing Will Crater the Global Financial System. Hopefully that gets your attention because there is a lot to cover here. Welcome, Paul.
Hey, Jim. It's great to be with you.
Thanks for being with us. This is huge. I'm going to say in the intro, it's the most important episode I've ever done, and I mean that.
Yeah, no, I think it's an important topic, and it's one of the things that compelled me to write the book.
Yep. Before we get into the book, why don't you just give the audience a little background about yourself?
Sure. So I worked for 40 years on Wall Street. The first half of my career, I was a sell-side research analyst, mainly in fixed income. And then the second half of my career, I worked on the buy side as an investor. And for most of my career, I've specialized in the energy sector, which has kind of given me a front row seat to the change in policy around climate change and sustainability, and now ESG. And the main firms that I worked at over the years would be J.P. Morgan, Lehman Brothers, and then BlackRock on the buy side. And one of the things that compelled me to write the book was the fact that no one on Wall Street has really articulated a criticism about ESG. I mean, there has been pushback the last 2 to 3 years, which is good, but no insider really has ever articulated any criticism. And there's a reason for that. It's because you're not allowed to.
Yeah.
ESG and sustainability policy typically comes from the CEO level. So if you disagree, you're not going to get paid, and eventually you're going to be out of a job. Yeah. And I kind of experienced that towards the tail end, the inability to speak out and have a public voice that disagreed with the CEO. So I thought it was important to articulate, I think what it really is a consensus view. I think there's a silent majority that works in finance that is not tying their career to ESG, that fundamentally disagrees with this and sees how it's a bad thing for the market over the long term, but they just can't speak out. And that's a design feature around ESG. It's totalitarian in ideology.
Well, and I really believe that the vast majority of people are just blissfully ignorant of how integrated it's become in that whole world of finance that you come from. I know it was a surprise to me reading the book, and I consider myself fairly well educated on this stuff.
Yeah, it really over the last 10 years, really in the period since the global financial crisis in 2008, it has made incredible inroads into Wall Street. And, there's a reason why they've been so successful. I think coming out of the crisis, we heard forever during the Obama administration about how Wall Street wrecked Main Street, right? Mm-hmm. Which obviously is a misstatement of what happened back in 2008. And there was a lot of government culpability in terms of lack of regulatory support and just bad lending policies forced on all the mortgage lenders. Yep. So I think government had a lot of responsibility for what went wrong in 2008. But clearly there was an image problem for Wall Street, and then ESG came along and it allowed them to signal their virtue. So now we're at the point where basically every Wall Street firm is a member of the leading ESG advocacy group, which is the United Nations Principles for Responsible Investment. And basically all of the assets under management in the financial sector are comprised of assets managed by members of the PRI. And with that, there are strict membership requirements. You have to integrate ESG into everything, every fund that you manage, right? Even if it was raised previously, it's a legacy fund, it had nothing to do with ESG, still they're doing that ex post, which is obviously a fiduciary problem. So you've had this creeping integration, and basically it's touching every firm right now. And then Wall Street is used to push it on the corporate sector, because by using the implicit threat of disinvestment, you can force all your portfolio companies to comply. And again, no one is allowed to buck the system or speak out, because then you become the target, whether an individual or a corporate entity.
Yeah. Early on in your book, you wrote about ESG. Basically, it is the corporate equivalent of inviting a vampire into your house. Is that kind of what you were alluding to, that it just kind of then takes over?
Yeah, I mean, it's, if you read Dracula or Stephen King, you know that you have to invite a vampire into your house. That's the way it works. And then once you do that, invariably bad things happen, right? And it's very difficult to rescind that invitation, if you even can. And that's the problem with Wall Street firms at this point, and also companies. They've publicly championed sustainability. And it's very late in the process for them to reverse that. If you're an investment manager, let's say, to come out now and say, oh, sustainability, we were, you basically have to argue that you were either dumb and you got fooled, or you were lying, right? Neither of which is great if you're managing money for somebody, right? So, it's late in the game, and it's very tough to back out of it now without looking foolish. And I think it's the same for companies. And exactly, the question is, what did you know and when did you know it? I think most firms, including Wall Street firms, know that this is not the way to make excess return by investing according to an ESG strategy. There's no data that proves that. So up until now, they've been publicly misleading investors about that. Whether they've done that out of fear or because they truly believe in it, it doesn't matter. I mean, it's going to lead to a huge credibility problem.
And so, for those who, surely everyone's heard of ESG, but it's, environment, social, and governance factors of a company that you're looking at here. And in the book, you kind of give cover to something that I've been riled up about for years, and that's all these CEOs and top executives who parrot just the far left line on everything. And so ESG does cover this broad wish list of progressive causes. You spell it out in the book as well. But what we're really drilling into for most of this is the environment side, and specifically climate change. And to me, the story that just caught my attention around that was the Dakota Access Pipeline debacle. So let's use that as an example to talk about how this has just gone nuts in this world.
Sure. So, and then one of the important themes, and one of the reasons why I wanted to refocus the conversation around ESG, is because I do think that if we focus on anything, it needs to be how climate change is central to the ESG agenda. And if you look at climate change, sustainable development, and ESG, these are all three verticals that are being led by the United Nations,
right?
For the last 40 years, really. And ESG is really the funding mechanism for the climate change agenda. So we need to remember how they're all interlinked. And there's a reason why, no matter who you talk to, climate change is the #1 ESG priority. And everything is really secondary to that, right? So we need to keep that in mind. I think up until now, the last 2 or 3 years, while there's been more focus on pushing back on ESG, which is all good, there's been too much focus, I think, on more woke capitalism issues in the corporate boardroom, right? More culture wars. And I think a number of people have probably discounted what's going on with ESG as just the latest skirmish in the culture wars of the last 30, 40 years. And that, I think, would be a mistake. I mean, I'm not minimizing any of those challenges with DEI or CRT, and especially if you're a young parent with young children in schools, you're fighting that fight every day. But when it comes to ESG, we need to remain focused on what's going on in the financial markets. Climate change is the main priority. Oil and gas is the main target. And Dakota Access Pipeline is probably a great example, which, again, there hasn't been a lot of focus on this. And this has been playing out for the last 7 years, really. So for the listeners who aren't familiar, Dakota Access Pipeline, it's an oil pipeline that was first proposed back 10 years ago in 2014 to take oil out of the Bakken play in North Dakota, the western part of North Dakota. And at that point in time, with shale changing all of the oil basins, there weren't enough pipelines to take the oil to market. So we were transporting crude oil by rail, which is a really dangerous, dumb thing to do, honestly. And if you're a climate activist, you should probably oppose that, just in terms of the emissions involved. So this pipeline was needed by the market. It would have replaced crude by rail, which would have been a good thing environmentally and safety-wise. And it got all the permits that they needed from the federal government under the Obama administration. So this was 2014 to 2016. And it was built on time. Everything was proceeding. And then come the end of 2016, the Obama administration, which just a year before had canceled the Keystone XL pipeline and joined the Paris Agreement by executive order, they proceeded to block it. And it basically was because the environmentalists and the local native population, the Standing Rock Sioux Reservation, came out in opposition to it, right? So that was the first thing that Trump did when he was elected. He reversed that, and the pipeline was completed in 2017. But the opposition from the Native Americans and the environmentalists never went away. They just took it to the courts after that. And the pipeline is operated perfectly safely. It hasn't had a spill or leak because it's a brand new pipeline, obviously. And still, they've taken it to every court to try and get a ruling against the pipeline. And they finally succeeded in doing that in 2020 with a district court judge in the DC district, not surprisingly, who ruled that because there was such a focus, and this was a major controversy, in quotation marks, this should not have received a simplified, streamlined environmental assessment for where the pipeline crossed the Missouri River. It should have gotten a full-blown environmental impact statement. And that's basically what held it up. It was just that 1.25 miles crossing underneath the Missouri River. So for everyone who's not aware, because I don't think this got the right press initially, this pipeline sits in the right-of-way of another pipeline. So all the arguments that in building this pipeline and laying it out, it was disturbing sacred ground to the Standing Rock Sioux. It's not on their reservation land. It cuts across right outside of the border. And again, it's sitting in the existing pipeline of a gas pipeline that's been there since the early 1980s. And no one has complained about that. And then even more so, this oil pipeline will go under the river by 100 feet. Whereas the natural gas pipeline just sits on the riverbed. So there is no environmental issue here with this pipeline. Physically, it cannot leak into the river above it. And it's not going to contaminate the water source for the Standing Rock Sioux. The environmentalists have no argument. They just want to shut down any infrastructure that's tied to fossil fuels. That's basically the agenda here. And they're hiding behind the Native Americans for moral support. So just to give you one anecdote, I've been teaching at NYU Stern a course on energy and infrastructure for the last 7 years. And back in 2018, we had a symposium on infrastructure, and it was to discuss the Dakota Access Pipeline. And we invited leaders from the Standing Rock Sioux tribe to give their point of view. And they did very vocally. And it was clear, and these were their words, they opposed the pipeline after previously supporting it because they wanted to get a piece of the economic pie. So, which again, they do that up in Canada. Maybe we should do that down here, but clearly they were changing the rules of the game
after
in
the fact.
mid-game, right? And would set a bad precedent. And there are also political issues and about potentially bribing a sovereign nation. So you could see why Energy Transfer, which is the company that sponsors and manages Dakota Access Pipeline, why they clearly couldn't play along with what they want. But it's all about economics. It has nothing to do with the environment or human rights. And those have been the arguments, and they actually got a district court judge to agree with them. So for the last 3 years, the Army Corps has had to go back and do a full-blown environmental impact statement, working with the DOJ, because there's a climate justice issue apparently around this. And they've dragged this out for 3 years. And rather than issuing a final EIS ruling and either keeping the pipe open or not, last fall they came out with a draft EIS, and they laid out 5 different scenarios for some reason. And 3 out of those 5 scenarios basically involve shutting in the pipeline. And then, they obviously had more public comments, and they're going to have a final ruling this fall. And if they do decide, and I do think they will, clearly that's the body language, if they do decide to rule that the pipeline needs to be shut down, that's going to be a terrible precedent for all energy infrastructure, because it's going to be the first time we're shutting in an operating asset. And just think of how many pipelines we've built in this country that have used that same streamlined environmental assessment to cross a river. You could have a field day if you're an environmentalist wanting to go after pipelines.
So, well, and the thing to me that leapt out about this, you talk about the Sioux and them wanting money. At least we can understand that. The environmentalists are going after something here that has improved the environmental situation. And you said it earlier, it's really just about attacking whatever they can attack. And this is a kind of high profile area for them, going after pipelines. You talk in the book about the lackluster, to be probably generous, the lackluster response to all this insanity and clear, really hypocrisy from the environmental movement, from the energy sector. And you say it throughout the book, the energy sector is the primary focus, where they're going after highlighting climate change and sustainability, but there's no pushback. What's going on there?
Yeah, I mean, I think how coward public CEOs in the energy industry are about speaking up and defending themselves just shows you how effective ESG. I mean, it's clearly showing you that the experiment is working. If you could shut up an energy company, which clearly is the target, and you want to shut them down, ultimately, then you can basically silence anybody. So it's been disappointing over the last 20 years that really this has kicked in. And I would say for the energy sector, it was in the 2000s when, Al Gore came out with his movie, documentary in quotes, and the UN and the IPCC really started ramping it up, right? And then right after that, we had the crisis, which I think kind of delayed the climate change agenda a little, but obviously they've gone back on track the last 10 years. But when initially you had this movement to go after coal in this country in the 2000s, right? And we should have been building more coal plants at that point, because gas prices, if you remember, were going up to the high single digits in the pre-shale period, right? But nobody was permitting coal. And basically that's because they could see the writing on the wall in terms of federal regulations. So at the state level, you had a lot of the PSCs that were captured by environmentalists, frankly. But when the activists were going after coal, the response from the energy industry was to play up their gas credentials, right? I mean, if you remember Chesapeake, which was a gas levered independent back then on the Aubrey McClendon, they were running ads talking about how filthy coal was, right?
Yeah.
And you had T. Boone Pickens also with his own little CNG thing on the gas side, and he was going after coal. I mean, he came up with like, a cash for clunkers plan for shutting in coal plants,
Yeah.
which actually Bloomberg, who really wants to shut down coal plants, he's running with that concept, right?
Yep.
So, it's part of this bargaining phase that the energy industry has been in for more than 20 years now. They think they can reason with the opposition. So if I have natural gas, again, that's a perfectly logical thing to say that I have a smaller carbon footprint and you should prefer me over coal or crude oil, right? But that doesn't matter. I mean, almost instantaneously, natural gas went from a bridge fuel to, oh no, we can't build natural gas infrastructure because then we're going to have to deal with this for the next 50 years. So methane instantaneously became a problem. I mean, it's great how climate science comes up with all these new factoids every few years as the narrative changed, right? So we no longer can use natural gas. So we're shutting in coal, natural gas. There's nothing to replace that from an electricity perspective. So, if we continue down this path, we're going to have more unreliable grids and more power outages, right? And that obviously is going to touch every American. But if oil and gas companies would just like read the room a little better and have more situational awareness, they would unify and not allow themselves to be divided and conquered,
Right.
And push back both on the climate science, which underlies ESG,
Right.
and also ESG.
Yep.
And maybe you're seeing a little of that now with Exxon going after some of the proxy activists. But I think we need to do more, and that starts with questioning the climate science, even though that's viewed as déclassé these days. I think the industry is more science-based than any other in this country, and they know more about climate change and the problems with the scientific theory.
Yeah. Going back a little bit, you talk about, needing to push back on energy, and we've covered that quite a bit here on my show. I've had David Blackman, I've had Meredith Angwin on a couple times, Lars Chernikau, people speaking up finally and saying, what we're doing is insane and it's going to lead to power outages and prices that people can't afford. We're seeing that now, and I think, hopefully there is a swelling of voices there. What I don't hear is a swelling of voices on the finance front and everything I learned from your book about that, where essentially my life savings are going to statutorily be put at the behest of these radicals. They're going to take control. My earnings are secondary to their investment priorities to push their political whims, is what's coming down the pike, right?
Yeah, I mean, you're going to have less choice when it comes to investing, because the next phase of ESG, the first phase was to sucker everybody into the trade, right?
Yep.
So you bring them into the tent, then they can't find the exit. And now regulations are coming in this country, Europe aggressively, that's going to cement all this in place. And it's not just that we have to fund green energy, we also simultaneously have to defund fossil and fuels. Right?
Yeah.
We're already spending more globally on clean energy, right? But that's not good enough.
Yep.
We need to stop investing completely. And the IEA has said that, starting in 2025, no more investment in oil and gas, right? So
which is
I think
utter insanity.
We need to take them at their word, but it will restrict what you're allowed to invest in. At points in time, you're going to leave money on the table, right?
Right.
I think that's all secondary. The goal with ESG is to capture all the capital flows in the market and direct it to wherever the political favored industry or company is, right?
Yeah.
And that will start with taking it away from fossil fuel companies. The rest of the agenda, they'll make it up down the road. But if they succeed in defunding oil and gas, no other industry or company is going to speak out about this, right?
What's horrifying to me is I come from the manufacturing world. That's what this show is about. It's so abundantly clear that the people pushing this have no earthly idea what it takes to mine, what it takes to farm, what it takes to manufacture. And if they succeed, all three of those things are going to fall into utter chaos. And that means shortages and famine and death. And I'm trying to warn people, and it's like, whatever. It's just insane. So you said it in your book, kind of that we're getting to the point in America and really the whole Western world where we can't make anything anymore, right? What do we
Yeah.
do to fight back against all this craziness?
Yeah. I mean, obviously, energy is central to manufacturing and industrial production. And energy
Absolutely.
has also been, fossil fuel energy has been the driver of capitalism for 200 years, right?
Right.
So if you look at ESG and stakeholder capitalism, which is kind of the theory on which ESG is built, that you should run your companies, for the good of people and the planet, as opposed to your
Yeah.
shareholders and employees.
Yeah.
Uh,
Thanks, Business Roundtable.
right. Which is
Go ahead.
not capitalism, right?
No, right. Exactly.
Basically, it's closer to fascism, frankly, but
Mhm.
it could be the end stage of capitalism, if things keep going along the current path. Um, but energy is central. So there's a logic to why you go after fossil fuels, because that has been the driver of capitalism. And I would
Mhm.
I would argue, and I discuss this in the book, just to give people perspective about what we're up against. It's not like a recent fad. This has been, depending on how far you go back, 40 years or really 200 years in the making. But I think ESG is similar to Marxism, and only different in that Marxism tried to take over the means of production through the labor function. ESG is trying to do that now through the capital function. And I think it will be much more effective in terms of outcome. But it basically is going to convert all of your money for philanthropic means, really, as
Yeah.
opposed to the current system where you're
Politically
supposed to make your
philanthropic.
money individually and then donate wherever you want to. But we're talking about a huge difference in numbers, because if you look in the US, I think annually it's like 600 billion, 5 to 600 billion that is donated to charity. That's less than the daily turnover in the capital markets, just in the US, right?
Yeah.
So we're talking
Right.
about significant amount. So we're trying to hijack the private sector and the financial markets to do the dirty work for what is a government-led agenda, hiding
Yeah.
through third parties like the UN.
Yeah. Now, it's not at all a happy read. I'll say that. I do highly recommend the book, but I'll warn you, it's sobering reading. That being said, however, your pop culture references are phenomenal. My favorite being this one. You were referring to Ayn Rand's uh, Atlas Shrugged. Not since the To Serve Man episode of the Twilight Zone television series has a book been so completely misunderstood by its target audience, which I found marvelous. And there's a whole lot more like that in the book. So those help leaven the difficult nature. The other thing that I did find heartening toward the end, you do lay out a really good laundry list of things that people in the industry and those of us, in the investment world, whether professionally or personally, can be doing. Um, there seems to be a bit of a swell starting there, a bit of a backlash. You have um, some of the proponents of ESG now kind of backpedaling. BlackRock slightly backing off their position. Larry Fink starting to say a few different things. And actually, there's a few headlines right now. I just pulled up. There's the J.P. Morgan resolution was pulled by the conservative investors, apparently thinking that they had moved that along and didn't need to have the vote on it. There's one that just came up today. Shoot, I've lost that one. Yeah, I don't remember that specifically, but there are some headlines where in the investment world, it seems like people are finally starting to push back a little bit. Is there, in what you see more, up close and personal and professionally, any progress with the laundry list of action items that you spelled out toward the end of the book?
Well, first, I wrote the book, and I am optimistic, even though, obviously the subtitle of the book is a little ominous.
Yes.
I think the first step to solving a problem is admitting you have a problem
Yeah.
and depth of that problem and
Yeah.
acknowledging it. So that was an important objective with the book. And as you say, the last chapter, which is the longest chapter in the book, lays out exactly kind of a game plan about how we can reverse this thing. So I would view the book as basically kind of a kind of Dickensian forecast. This is the ghost of Christmas yet to come, unless we change our ways, right?
Yeah.
So we still have time. I would say that way. And the more people focus on it and ESG and what the true objectives of that movement are, I think the better for everyone around. In terms of, the last couple of years, some of the retreat, at least publicly by some of the proponents, BlackRock, obviously, Larry Fink, have been, chief advocates for sustainability.
Yep.
There's been some retreat there, and you've had a few financial firms that have retreated from and withdrawn from some of these net zero alliances that have sprung up. I honestly think a lot of that is tactical. I think a lot of them have been really, BlackRock in particular, have been stung by how strong and visceral the political pushback has been for many of the red states. The money that's been withdrawn from BlackRock, even including Texas Permanent Fund recently, it's $12 billion right now. That's a rounding error. So you're not going to be able to remove enough money to really cause enough financial pain for a firm like BlackRock, given its size right now, and the fact that it's mainly passive, right? That's the other thing.
Yeah.
So it's kind of like a sponge. You can't beat it up, right? Because a lot of it's passive. It's going to take a lot to move that money, even with a strong argument around ESG.
Yeah.
So I think that strategy is not working. I would say that a lot of the focus of the opposition around this time of the year with the annual general meetings and some of the resolutions that activists have put on the board and some of the proxy fights that we've had, like with Exxon 3 years ago, I think a lot of that is frankly, it's distracting. It's more for show. I think the real battle around ESG is going to take place in the credit markets with bank lending and then institutional bonds, as opposed to the equity market. So, and for all of these resolutions that ultimately find their way and are voted on, most of them are voted down, right? A small minority of them actually pass after all the public fighting, but many more are withdrawn quietly by consent with the management of the company, and I think are being implemented behind the scenes, right?
Right.
This is another thing to realize about ESG. It's not everything you read about in the press. There's stuff going on day to day, and Wall Street investors are doing ESG engagement on a daily basis every time they talk to these companies. And that is the daily pressure that we have to relieve if we were going to come around with a way to reverse this thing. Yeah. So, I think a lot of we're not winning unless we're using the Charlie Sheen definition of winning. So I think we need to keep that in mind.
Right.
I think the way really to win is to use the tactics of the progressive left in reverse. We need to use the court. We need to go after the regulations that have sprouted up around ESG and climate change over the last several years without a public vote. I mean, it's a very non-democratic process that has foisted this on indirectly to the American public. Sure. And we need to be as aggressive and creative in pushing back on that.
Yep. Well, and I've spent my life wishing that we weren't such a litigious society, but you're absolutely right. We're not going to push back on this without using the courts. And actually, you covered in the book one piece of that I've been kind of raising the flag on just in recent months as I look at the outrageous behavior of some of these activist groups, openly questioning on LinkedIn, why aren't we using the RICO Act against these folks, the anti-racketeering law? And you cover that in the book. So well done.
Actually, just to point out, with Dakota Access Pipeline, Energy Transfer, who's the sponsor, who's been completely vilified unfairly around that pipeline project. And actually, a number of European investors, and Europe ESG is like ground zero for ESG, right? Yeah. So the force is strong over there when it comes to sustainability. There are a number of European investors that have refused to own the debt and the equity of Energy Transfer because of what happened with Dakota Access Pipeline, and because the United Nations has designated them as a violator of international norms when it comes to human rights and environmental standards, which, again, you can't argue against that. It's kind of this catch-22. You can never get
Mhm.
off, that list.
Right.
And again, based on the facts, there's no truth to it. But I would point out Energy Transfer has done the right thing about aggressively going after the opposition through the courts.
Yep.
And they initially brought a RICO case at the federal level against both the Standing Rock Sioux, but particularly Greenpeace and the other environmental groups that are hiding behind the Indians. That was thrown out by a Clinton-appointed judge, but they took that now to the state level in North Dakota, and that is actually going to trial this summer. And I think that's going to be a great precedent, which again, if you look, everyone is working in concert against the industry, all the environmental groups, whether with other government agencies or not, but clearly there is collaboration and collusion there.
Yep.
So, I think RICO is the right standard to use. And also, as I recommend in the book, I would use the same tactic going against all of these groups that are pushing net zero, right?
Sure.
I mean, one of the reasons why JP Morgan and some of the others, Vanguard, withdrew from those net zero alliances because clearly there's an antitrust issue there, right?
Yeah.
So we should use the Sherman Act to go after all of these climate activists and ESG advocates. And we should also use RICO as well, because you clearly can make the argument that constraint of trade, collaboration, a problem with interstate commerce, right? I mean, if we can use it to go after the mob, they can modify it to go after what has been mob-like, behavior by the climate groups.
For sure. Yeah. That chapter alone, I mean, I recommend that everyone should read the whole book, but your chapter on pushback itself is I think absolutely should be required reading for anyone who has money. Because that's where it leads, is using their money against them.
I would add, Jim, one more point about the pushback. Yeah. If people do anything, they should give an earful to their Republican lawmakers. And and I'm using Republican specifically because ESG is obviously progressive politics, right? It's a political issue, right? We shouldn't shy away from that because the left has always used that as a way to shut down a conversation. They've done it around climate change. They're just being political. They're doing the same thing with sustainability and ESG. So there's a reason why Democrats uniformly support these policies and why Republicans, not so uniformly, but in the main, they also oppose it, right? So we need to acknowledge that up front. I think people, if they educate themselves more about what's going on in the markets, maybe a little more on climate change so they're more comfortable to speak out about it in public. I think intuitively people know it's a scam. It clearly is. But the other side's not backing away. So we can't laugh off, what they're trying to accomplish at this point. And then give an earful to your Republican lawmakers at the state level, because it's going to take government resources to lead, what is going to be a legal fight. And we've already seen the beginnings of that with West Virginia versus EPA. We've also had the red states challenge the SEC's new climate disclosure rules, the new EPA rules going after tailpipe emissions, which are CO2 emissions, right? And also the power plants, which will shut down coal and natural gas power plants in the next decade. So the red states have to lead the charge here. There's safety in numbers. The more people that speak out about it, both in the public, the energy sector in particular too, I think will embolden some of our Republicans to do the right thing.
Well, and you get right down to the individual level as well. And I meant to say at the start, you explained something that I've been wondering about for years now. Whatever happened to cost versus benefit analysis and opportunity cost analysis seem right out the window. Well, they are out the window because we're just going to invest in shutting down fossil fuels come hell or high water. You say in the book, though, question people. If you're an individual in a manufacturing company and someone brings up something because of sustainability, have them show you the cost versus benefit numbers, right? Ask them for the details. Ask them what other investment's going to go lacking, opportunity cost, because we're pouring money into this sustainability scam. You can make a difference even if you're just a schlub like me, right?
Yeah, I mean, ESG is probably the only thing where they don't have to have proof of concept, right? What they're telling you is just trust us, this will work in the future if you do it now. And there's no historical record that they can point to. And actually, the historical data that we do have indicates that everything that they're arguing for is going to turn out very badly. And we
Yeah.
have, Europe, since they're the leading edge of ESG and climate, we can see what's going to happen down the road for this country. In Germany, the economy is deindustrializing, right? That's what it means
An article
to
about that.
cut your emissions, right? Industrial production in Germany has declined for the last 7 years, right? No one talks about Germany being the driver of the EU economy anymore, right? And
No.
we saw with high energy prices caused by the war, how that shut down a lot of manufacturing companies that have been around for 100 years. So, driving up energy and electricity prices will further shut in manufacturing, or at a minimum, just shift it overseas and accelerate the globalization trend that, over the last 20 years is kind of, eating away at our economy.
Well, yeah, and another example of hypocrisy from the environmental movement, where they're shifting this production from places with high environmental standards to places with no environmental standards.
Yeah, no, logic won't work on the other side. I think we should also acknowledge that. So when they say they don't want to debate you anymore, it's because they don't even have, reason on their side.
Yeah,
right? So
that's
again,
same as when they call you a denier. They don't have an argument anymore. Yeah,
right, which is actually fairly effective. I mean, the first time I was called a climate denier, I laughed. I thought it was humorous when they tried to get me fired from NYU Stern because of my beliefs, right? But for a lot of people, it's very effective to shut them down because they don't want to, feel out of place or not be invited to cocktail parties. So we need to get over that, obviously.
Yeah, for sure.
But if you drive up energy and electricity prices, manufacturing doesn't work.
Right.
And the scenario, the negative scenario for the markets is basically, if we have unreliable grids in this country because we've succeeded in net zero, that's going to be a very negative read-through for the macro economy, and there's no way that that's going to be positive for the financial markets. So this promise that if you just follow our climate change directives and force everyone to cut their carbon emissions, it's going to lead to better economic growth and outsized financial returns. There's no proof of that.
Right.
But as you were saying, Jim, this is a two-tiered system. The rules apply harder on the developed countries and the developed markets than they do on the third world, because it's meant to be a wealth transfer, right? And China and India clearly are not developing countries by any reasonable measure, but they're allowed to ramp up their carbon emissions and with it, their economic growth and industry, while Europe and North America basically, are forced to deindustrialize and get to net zero, which is going to lead to more poverty and more increased mortality rates. Because as we saw in Texas, if you have a grid that goes down in the winter, people will die, right? For all the talk about global warming, it's the colder weather that kills people, right?
Absolutely right. Yep. Well, we could go on all day, Paul, but we can't based on time. So one last question for you. What's coming for you? What's on the horizon?
So, when I left my last job on Wall Street, I obviously was wanting to free myself up to speak my mind, right? And that obviously became problematic, still working in the industry, about a lot of things: energy policy, climate policy, and ESG, right? So the book was the first step there. I recently joined a new energy think tank in Washington, which is run by Mark Mills. He used to be with the Manhattan Institute.
It's a good friend of ours.
It's the National Center for Energy Analytics, and we're backed by the Texas Public Policy Foundation. And the goal of the group is to put out cutting edge research to support more rational energy policy in this country. And again, hopefully to embolden the Republican side of the aisle to be more aggressive in pushing back on a lot of these, ill-conceived climate policies that have been driving, the country down, frankly.
Yeah.
And so, we're going to use research and rationality to try to push back on that. And then away from that, I just want to maintain a public voice. So I'm thinking about a Substack, got to get a website up and running. So, when you're self-employed and you can't be canceled by anybody but your wife, you basically can do a lot of things. So I'm going to think about exactly the best way to get the message across.
Well, you got a great message across here. I will include a link to the book in the show description. I'll include a link to you and Mark's new outfit as well. Go there, folks. I know this show is watched by a lot of smart people who are scratching heads wondering what the heck is going on in the world. You got to go do your homework and get these facts and be ready to push back at whatever level you're at, because it's absolutely crucial. So Paul H. Tice, thank you so much for joining us today. It's been incredibly informative.
Thanks, Jim. I enjoyed it.
Okay, keep up the good work. And of course, thanks to all of you. You out in the audience are why we're here every week. Every Tuesday, a new show. I can't promise every show is going to be as informative as what Paul brought us today, but they're all going to be at least a little informative. So thanks again. We'll see you next Tuesday. So long from Manufacturing Talks.
Thanks for tuning in to Manufacturing Talks with Jim Benoski. Watch for new episodes dropping every Tuesday. And don't forget to like, share, comment, and subscribe.